Hello, hello, hello. How's it going, everyone? How's everyone doing? What's been happening? Just got our usual treasuries up to start. Had a blinding day. It's been a really volatile day in treasuries. The bond auction came out and we essentially taken the NFP high, now consolidating above it. How's everyone's trading been? What's been happening? We'll clear the trades here. We got a fantastic example of pressure points today. Fantastic example, which we're going to run through in the next video. Nico, how's it going? Nice to stop by, buddy. How's it going? How's your trading day been? Any trades for you today, my friend? No trades. Nice. Very nice. Yeah, I think we'd traded the 30 year today and the ultra, so it was a good day. We go to open trade window, 8 tickaroos on 8 ticks on the 30 year, and on the ultra we had 5. So get the pom poms out. Fantastic day for me. That doesn't, God, 13 ticks in treasuries is a great day. I mean, normally if I take uh, the 30 year and the ultra today were essentially lagging and leading today, which was great. I missed an opportunity actually. I was recording. I've been making a conscious effort to record the sessions now, and I was having a spot of food and missed. Um, I think we missed the break of 14s, and essentially there was a great pressure point, but we saw some stops taken, which was in essence the low of the day once the price absorbed and went bid. Um, but normally, if I can take 2 3 ticks in a day, it's great, especially when you're trading, 5 to 10 contracts. It's good. So wait for some more people to join. Do you guys? I mean, I appreciate that watching this is like it's like watching paint dry. Where the 5 year is just turned into POC. We're maybe 10,000 contracts roughly away from this price for this turning into POC. We've already had the bond auction, so nothing pretty much is going to happen here. Um, I would like to see is if we can, work our way back um, to the POC here, but we need to break 19 and a halfs in treasuries. It's a key level. Neil, buddy boy, how's it going? How's your day been, mate? Please tell me that you got that rhythmic Apex shit sorted out. Okay, 3.6k here hits. Markets then ticked up 47, and we've seen 1700 pulled on the 10 year. Still waiting a response. Was that across the board, Neil, or was it just yourself? Did you speak to any other traders? Okay, so we've just essentially upticked, reloaded here. So let's see if we can, if there's more buyers going to take this next price, and then see if they do sell into this. You want to see this hold. If there's to be some buy side, but we are absolutely trickling at the moment. I think we're probably gonna. I mean, I'll bring this chart. This is the 4 tick range chart that we have up with delta for the day. We've seen we essentially, sweep to highs here on the 10-year, and now we're just reverting back. And then TPO wise, you can see we've just back below the NFP high. This is the high for this new contract. So imagine it would be nice if we can work our way back down to today's POC in terms of volume. And if we do crack here, we may get a little slice through. Chances of this happening though, with really an hour and 45 minutes or so, maybe just 2 hours left of trading, is relatively unlikely. But I definitely think there's more downside to be had than upside. So the reopened chat and a lot of people saying similar things. It's crazy you can run a prop firm and have this many issues if we get payout. Yeah, exactly, Neil. I would take the money and run, because you can just take a full payout, can't you? Hopefully you've not done any DCAing or stuff, because they'll. If you give them any excuse to even, you know, to even think about dollar cost averaging, they're just going to block the payment. That's not ideal. Right, we're going to switch to treasuries because to we will switchy. Mm, mm, mm. We had a glorious sweep of yesterday's low of day in the profile here, and then went right back to value. They're at it again. It's a daily occurrence. This isn't it? You know, it's like I should get a tape recorder. When if we drew that box, if we had that box in as well, market comes down, drive it, absorb, lift it back into POC. Classic. You have a DC in your life. Nice one. Nice one, mate. That's what I like to hear. Best way to be. Okay, now we're completely in the middle of the range again. Um, Likely option is, are we going to get up here? If we can get up to previous day's high and fade back down into the POC, that would be great. If we don't do anything else, I think that's the next opportunity. If we can get up here with some oomph, we are then essentially well out of whack from VWAP as well. A nice little sweep and then back. Let's see if we can create that. The nice little double sweeperoo and back into value. But did you take any trades, Neil, or did you have to wait until they sorted that out? And it's taken them, so it's taken them a day. They've not sorted that issue out. Or can you still trade your account, or is it locked out, or like what's the deal? So we'll come in for the next hour or so of volume. Let's see how the market goes, but I think we could potentially see some more upside. We will get to the high of day, sweep, and then revert back. I just cannot see conditions where we rip above highs and sustain the highs, especially with the numbers that come out today. Right, I'm with you, Neil. Yeah, I think a lot of issues were with rhythmic yesterday. I've heard a lot of people complain about it. If you guys could like the stream, that would be great. And how do you feel, Neil, not trading today? Did you watch markets, or did you just take a day off? Like obviously you didn't execute. Did you execute on any other accounts or a personal account or anything? Just watch the markets. Nice. Very nice. Yeah, it'll be interesting with this pretty much just being at VWAP right now. We're gonna struggle to break here, but I still think there's an opportunity to take here and see what the market does. I'll need to see on the DOM what size was hit here in one clip. Nice. Nice, Neil. Like your style. You can never have too much time refining the old edge. That's the way to go. I wonder if did anyone else send? Did you take any positions? Are you in any positions at the moment? I have a feeling over the next couple of weeks that we're going to dump hard. We need to correct this gap as well. Market loves to correct, and once we crack here, the buyers have essentially held here, last ditch attempt, and now we're back in. But when it does take this level, it's going to be a capitulation, like some aggressive selling. And whether or not when the market does that, but we need to essentially reclaim this area. Well, Neil, I think at least there's one way, working on your edge or journaling, spending time with the journal. You should be doing that daily anyway, but journaling's super important. I can actually say I probably wouldn't be the trader I am today if I never started spending time in my journal. It's almost as important as trading itself. It's the same as poker actually. I played a lot of online poker in my time, and it's the same uh, as knowing your statistics in poker and basically working on your strategy. Trading is no different. Both has got an element of journaling to it. Very very same concepts. Cammy buddy, how's it going? Nice of you to stop by. Cammy was super nice on one of his streams, recommending to his viewers their channel, so it was much appreciated. Thanks very much for that, dude. So Neil, you had no position taken. Well, exactly, Neil. What was to be is to be with one of the firms. Yeah, Cammy's got a great channel as well, which is great. Nice that we're building a good community here and trying to remove a lot of the fluff that comes with YouTube. So I like the space that we're building together. Try and create some positivity and you know be really realistic with trading, um, because trading is not simple. You know, Sadly, a moving average cross with a pine script that says buy is not resulted in me sitting in the Bahamas. So if only. Formula, I'm good, buddy boy. I'm good. Nice, Neil. Nice. Cammy's signing checks and cutting ribbons, signing checks, and kissing babies. Nice one, buddy. Hopefully it was a good meeting. This market is like a snail at the minute. We were discussing earlier that last ditch attempt for buyers where we basically swept the low And then I would need to look at the tape to see. I think we'd have probably seen some absorption down here, but then when delta come in, which corresponds to down here, I would like to see how the offer had been pulled to get here. But in essence, with us having the sort of bell shape distribution, the likelihoods of us at this day, just because it gets to a point of no return, they essentially aggressively hit into the bid, and when it gets a past an ATR, as an example, they need to fill this gap. But when they do crack this and fill this gap, it's going to be some aggressive downside, I reckon. Like it's going to be more of a long liquidation that's going to take it. So, Olav, good question. Um, the one pet peeve I have with Sierra is their time in sales is not that great. Um, and to be honest, I have alerts. So when I'm executing myself, I use Tick Strike. I tried to put in Price Squawk. Um, I tried that out. Our dudes in the Discord. Um, we were discussing it, and I didn't realize that the plugin for Sierra. So I essentially added it. Sorry, I just muted myself. I essentially added it in just to see what it was like, and it's the software's not great, and it's a little bit. I just want to know when size is coming in into correlated markets that is relative to the product that I'm executing in. I don't really need something to tell me it's buying and selling. I'm watching the DOMs. I can see what's been lifted and what's been hit into the bid. You know, so I think when you're trading the likes of indices and NQ, and you've got the Russell and the Dow up for correlation, the most logical correlation and addition that you can add in there is going to be your big six. So your Apple, Microsoft, Amazon, Tesla, Google, and Meta. I think I maybe should have. I don't know if I said in video or not, but you'll get six or seven in there that effectively make up 26, 27% of the whole market. So it's important to know when size is coming in. So if it's aggressively coming into a breakout level and you're seeing uh, essentially a tick down in all indices, and the big six are, you know, having bids aggressively hit into, then it helps for that breakout trade. Like, or you shouldn't be fading at that time. So that would be the way. So I've kind of went off on a tangent here. This was about time and sales. The reason that I don't use that is because I watch the DOMs. Um, and if I was to use time and sales, I would have it do not filtered, and I would have it um, only showing me sort of larger trades, because I want to know when large trades are being executed in one clip and what prices they're being executed at. Um, so that's typically how I view it. The depth of market, I mean, you've got like footprint and time and sales and whatnot. They're just different ways to view the DOM. You know, the depth of market, in my opinion, is your bread and butter. Um, it has everything. It's got your resting orders, your aggressive orders, being market orders. You've got your volume profile in there that shows you the aggregated volume at each price. And with the ES, we have some delta that we can. We've got a hotkey to refresh, and it refreshes to the recent minutes. Uh, and that's pretty much it. But I would say, honestly, this is like we are in summertime, so the ES trading is not been it's not been great. Never is. Um, in comparison to a number of years ago, ES is a different market. It's just thinner. This is a balanced day now, because look how thick the bid and offer is. Compare this to yesterday, and it was maybe 50 less prices at each, 50 less waiting at each price to be executed. So when you've got days like that, you need to have a wider stop because the ATR is higher, and when the ATR is higher, that normally means that the bid and offer is thinner. So it should be part of your checklist. Um, when you're getting into a day, if you're not checking the ATR, just have a look at how thin the bid and offer is. If the bid and offer is thin, you can go for higher targets, but you also need to go for higher stops. And of course, you should then be managing your risk appropriately. Just because it's a higher ATR doesn't mean you take the same risk, right? Because it's sod's law that the day that you, without realizing, increase your risk because the bid and offer is thinner, is the day that you'll end up doing your arson. So manage your risk appropriately. You should be coming into every day knowing your downside. So that was a long tangent about time and sales. So that's a perfect example. Is that, did you check the time and sales, Neil, for this here? Is this what you're explaining here, buddy? Marked by the yellow bubble. So for large trades, um, again, it depends on how thick the bid and offer is, but I'm not really interested in anything less than 20 contracts in one clip. That just gives you a sort of slight feeler. Really, you want to be seeing more than 50, um, and paying attention when it's more than 200 in one clip, not combined at price and type, because that aggregates them. You want to see what firm or dude is executing in one clip size. And if you're referring to the bubble, Neil, um, this is really important. So when you get to the low, right, this was an extremely important level, as we've already discussed here. And when you see this and someone has aggressively hit, say, 600 contracts into the bid, and the market has basically taken that, right, that confirms the theory that the sweep of the low is then going to reverse back to value. Because if someone is hitting 600 contracts or whatever this number is, I need to look at the tape, but you were saying 600 contracts. If someone is hitting that in one clip, right, we should be down here right now. That should be enough to hit that and basically create a cascade of stop orders down here, but it didn't. They absorbed it, and then the fact that they absorbed that and then lifted into the offer, and then you have the other side of the coin that we cover a lot here, where when this happens, you then have people that steamed in short, they now need to become buyers, and before you know it, you're basically back at the point of control within 15 minutes. So good question, Scratch. So we have, I've got an extra one here for ES, but this is volume profile. It's the full most recent day's session that also includes, um, the pre-market. Pre-market's not got a huge amount of volume in it anyway, but I like to know what it is. This is delta. So delta is the difference between market buyers and market sellers. A negative number is more aggression on the sell side at that price. Buy, positive number, or blue here, is more buying at that price. Now I can refresh this at any time, so it allows me to see what's happening, just maybe easier on the eyes. You can see that there's been more buying aggregated. This is the price column. Then we have an MBO data column here. So this is set to a minimum of 50 contracts. which is interesting because you see that not one of these orders are down here, not uno order is greater than 50 contracts. So what that means, if they start hitting aggressive, they will pull. If sellers start coming in right now, they are probably not going to be real. These orders, this is just market makers stacking the prices, that and then you can see here there's an 80. So that's what the MBO data is. It's just showing you size in one order type at a price. The combined pulling and stacking column is here, which essentially shows you what has been pulled and what has been added to the resting order, whether that be buying or selling. We have this combined, we used to have it separated, but it's nicer on the eyeballs if it's in your peripheral straight view. So very simply, you can see here that this is it's moving really fast, but we'll take here 74 bids, 33 added, so they're hitting into the bid, but then they're continually adding. So the market's then ticked up and they've reloaded the bid. So that's what that means. Okay, then blue team is buying. And now the most important one is that this seems to be missing on a lot of DOMs. Some softwares lack it, some people don't add it, but this is extremely important for your depth of market. So the red column, right, with the red numbers, is aggressive orders hitting into the bid, is known as selling. Okay. The blue column is buy, or is basically buying or trades carried out of the ask, which is known in trading as lifting into the offer. Okay. Price moves diagonally, as you can see. So, it goes between what's waiting on the bid, what's waiting in the offer. The market moves really quickly, but it needs to take the next price. And when the market's like this, we just said that these orders down here are likely to be pulled. So when you see selling into the bid and you see a continual refreshing like this, there's 166 executed here, they're continually refreshing, as an example. So hopefully, did I cover everything there, Scratch? So good question, Neil. So pretty much, say 600 contracts. This is the thing. Um, I'll reply to that in a second, mate. So left of the bid. Right, I'll explain that in a second, buddy. So when 600 contracts to these guys, Neil, is probably not a lot, right? And very often, when you see price get to a level like this, right? These guys or firms know that they don't need to spend much money in order to create hell, right? So the price gets to low, they're probably like, right guys, we can bang it here. We can literally bang this 600 contracts, 1,000 contracts, selling, right? And then they're probably thinking to themselves, I'm just surmising here, but say they say, right, we want to be net long for the next month, right? But right now in this session, we can see some sell side happening, so we can bang it, and we know that if we take out this level with some conviction, there's going to be a domino effect and stops triggered, which means they can then drive the market down, get out of their orders, and then start flipping on to the bid because they want to be net long anyway, right? And when they see this happening, there doesn't get a much more clear indication in this. They're trying to create that hell. They hit it for 600 contracts, and some other firm is stepping up and saying, "I'm having that," and then instantly they're like, "Okay, that should have went," because you can imagine this. Imagine you were the one that was slinging 600 contracts. You're thinking, right, I'm gonna cause some pain here. Let's drive this market down, close the gap, and let's do it right now. Okay? They smash 600 contracts, and the market doesn't even blink an eye. Doesn't even move. would you not instantly be covering? Or you would be flipping. If someone's just taken your 600, right? You need to now think to yourself, okay, that should really have went. So I now need to start covering and basically look to start lifting into the offer as well, as an example. So that's the way that I view it, Neil. Hopefully that makes sense. So, buddy, you're talking about the pulling and stacking column, right? I wish I could do this in slow motion because it's quite hard to explain when it moves fast. But the general theory is the pink numbers, okay, it's really close to price because I'm not really caring about 20 ticks away because the time the market gets there, unless it's a decent size order, right, these prices will likely change because they're not real anyway, okay? So when you see the market, let me clear this. When you see the market tick up, okay, then you see more contracts added, okay? So you see there was 89 there, then it was pulled, 78, and see what happens when the market ticks down. Okay, it's holding. You can see that they're constantly adding and pulling into these columns. And ultimately, to have one-sided bias, you want to see this. So you want to see market tick up. Okay, now see they're holding. There's only 7 traded. And when they tick into this, so they've just taken 79s, right? You want to see them take the next price, but they don't, so they tick down. And you want to see them lift 33s and then reload into the bid. And by that I mean you take out this price, okay, and then you reload and add on. Or the same on the offer side, to have a continual flow, you want to see them take a price, so they're not doing that. They're hitting 76 in there, and the market's actually ticking up. Because this 176 is sitting here, when the market gets here, let's see how much is pulled. Okay, so look at that. That was 176 there. The market traded and 76 just jumped away. So then they've refreshed. Okay, so they've actually then refreshed their order type there because 191 is traded. So you can see the refreshing here. So there's a little bit of two-way going on here. The market's just moved by 40, 50 ticks. Sorry, 40, 50 contracts traded. You're getting to this price and you're seeing 361 traded. So clearly someone is happy at these prices to take them. Hey buddy, so I use this is just straight up volume profile here. This is delta to see what's happening at the right now, just to have a quick glance because it's very simple in the eye. If I refresh this to the recent minute, and you can see what activity is happening. Now my theory of what we're going to do here, I would like to see it if we can really create carnage. If we can go up to we're going to struggle to break initial balance high, but the gold trade would be right. Let me get my trusty rectangle out here. Okay, if we can get up into this range, okay, aggressively hit it, take orders up here, and then slam it back into sort of 40s, 32s. That would be a thing of beauty, because you can see they just carried this out here, and now they're just everyone else is buying because they think it's going to the moon. But then ultimately, when price gets here, they then just flip and then drive it back into value. Because it's almost like an elastic band, right? You have a fair value price of where the market is. When the market gets too far away from that price in a day of balance, not in a trending day, in a day of balance, you want to be looking to revert that back into where a fair value is. And the levels where they decide to flip that on is typically areas where stops are going to be accumulated. Because every single, not saying it's retail, but just everyone in the gran, right, when they take a sell position here, their last hope is up here. And the market loves to take prices to the last hope and drive it through. It's just how the market tends to tends to do things. Yeah, but Delta's a. I mean, the thing is, in my opinion, your Delta is a really quick way for you to determine um like the buying and selling activity that is happening, right? Is price matching that buying and selling activity? Okay. So for example, right now we are going down, okay? The market has just traded through these prices with 54, 80, 53, 54, right? Look at all the bids that are sitting here. The market to get down to here didn't take a lot. The bid was pulled. And then notice when you get down to this level, they started stacking, right? So this is a clear larger firm that has just done that. They've moved their bids, okay, gets down to a level, they then absorb, and then they start lifting into the offer. This is how the market moves. There's actually not really any real buying and selling. They're just moving price. There's no real direction here at all. This is just market makers pulling their offers, pulling their bids, absorbing, lifting, feathering into the next price. Market gets to sort of scary areas and then they can get out and then they start flipping. You know, because note when if you watch this right, how there's hundreds here in the bid and hundreds in the offer. When the market gets to these levels, when you notice they're pulling it by 5 and 6 ticks. 5506, you say, Goosey boy. Oh, 5506. Oh, so we're talking the same area. Is that 5 5? Oh, you're way up here. You're way up here. Mm-mm-mm. So your recent bid and ask column values are quite a bit different from mine. You're using Sierra mimicked most of your setup. Do you use any time to delay to aggregate? So what's your refresh? So you need to make sure that your reset the reset the recent bids and ask volume on change is set to yes, and you need to make sure that when it's that when it's changing, and what I mean by this, like how do I explain this? Okay, so the way that I have this set up is this is trading right now, so it's aggregating because it's at that price. Okay, when the market gets back to this level, it's been away for 2.5 seconds, so it will clear these and it'll start aggregating again. Do you see what I mean? Um, so you need to make sure that it's 2.5 seconds, which on Sierra they do it in milliseconds, so make it 2,500 milliseconds, and then you should be seeing the same. Also, I use Denali, so I don't know if the separate, if you're using a different data feed, that maybe throw the numbers out ever so slightly. Hopefully that makes sense. You need to make sure the when the price changes, it's set to yes, and the time is set correctly. Because if you just set that to no and then put the time to, like, I don't know, 10 minutes or something ridiculous, it will just continually aggregate. So then you're not. I mean, that's fine if you want to clear the DOMs really frequently. But this way you're not needing to. You're seeing what's happening right in the now, but you need to remember what's been recently traded. This is where, when you've got this set up this way, this is really taxing. You cannot trade this 5 6 hours a day. You need to pick your 2 3 hours and focus on your specific markets, and really dive in, because you need to really focus. Does that make sense, Sathya? Yeah, well, they should. It should be that if you manually clear them, if you've got the reset changed, when the price gets to them again, they don't aggregate. You know. So you can see 100 here. Let's see if they pull this. Let's see if this will be the first spoof of the session if they pull it. Yeah, there we go. Classic. Let's see if they're going to take that now. That's them essentially testing how strong the buying is, to be honest. Yeah, exactly, Neil. That's the way I do it, man. I only trade 2 3 hours a day. Um, and if I make money in that 2 3 hours, fantastic. If I don't, sell a V. Because it's really taxing. I mean, look at the time. You guys can see the time here. Like I've had a full working day. You know, like you're never going to be able to be as vital and make the best decisions at this time of night. You know what I mean? Like that's you, when you're working a desk job, right? You in your own, you need to have lunch, you need to have a break. You know what I mean? You can't be glued to the charts all the time. This is a business like anything else. You have lulls in the day, you have good days, you have bad days. The only difference between this business and any other business is you can show up to work and not get paid. That's one of the big differences that people seem to forget. But when you've got that, and you've got that in place, that's where you need to basically decide of a day, right? And this is extremely important. How much are you going to spend in your business that day in order to decide if you're going to have a good day or not? You know, when you think about it in that terms, it makes a huge difference. Instead of just going all in or whatever, keep yourself fresh. No, I know you need to go for a walk, take a break, man. Take a break. Split up the session. Split up the session more. Trade. I mean, seriously, do you think the dudes at Goldman and Citadel are not when it comes to like 11 a.m. 12 p.m. 1 p.m. They're away for lunch, man. They are not at their desk, you know. So and that's generally the reason why the market has a lull at lunchtime because people are actually having lunch. So you should too, and have a break. And then, if the price action looks good in the PM session, it's still an okay time for you. So by all means, have a go. But if nothing shows up, then nothing shows up. But make sure you're breaking up your sessions and feeling fresh. You don't need to be glued, man. Because I can tell you, if you glued, when you glue yourself to the charts, you feel stressed and pressured in case you miss anything, which helps you. It kind of hurts your psyche a little bit, and you feel like you're missing opportunities and stuff. Um, and ultimately you just don't make the best decisions. So that's the way that I would do it. So Olav, I only really I only really care about when the market's in balance. I only really care about today's session, today's regular trading hours, and the pre-market. When the market is in price discovery mode, like it's not at the moment, but when the market's in price discovery mode, I use volume profile monthly to sort of lean on. So for example, when we do correct here and we take this gap, right, because we're going to reclaim this, my sort of idea of whereabouts are we going to stop? Well, you know, we're going to stop round about this area. It's a big gap, but that's typically what I would do. But when we're in the current day, I'm thinking, right, here's POC, here's out of value, this is a pre-market high and also out of value. So if we do get up here and the market goes aggressively bid, this is a fantastic area to be shorting. So that's my general consensus, but it has to be specific on the day type. Are we in mean reversion mode, or are we in price discovery? So let's 345. Let's see, they're really trying to pump this. Watch this pull. So you really think with this size in here, the algos are going to be going mad and absorbing. That's the theory, right? Because we get huge size. This will try and go up 4 or 5 ticks, and then they'll probably pull this. Let's see if they pull it. Are they going to be sneaky? That was actually my internet disconnecting. Fantastic. So hopefully you guys can hear me okay. I think my internet just cut off there. Can you guys hear me okay? I think you can. I'm hoping. Still not pulled yet. Now that's the thing. Mental capital is really important. People overlook that. You have your capital that you're looking to spend in a day, right? But you also have mental capital. That is like a little pot that you should have as well. Because if you're holding a trade in drawdown for an hour, you're mentally exhausted. And it also comes into breaks, to be honest with you. Ah, you can hear me. Fab. That's great. Right, so the theory with this here, with them putting this order, right? They're trying to create basically some buying to try and drive price up here. So let's see. Oh, they don't pull it. Wow. So this is not a great sign for buyers. The sellers have just instantly taken that, right? And that is probably the test. That was taken in one order type as well. So it's interesting. The next point we need to get to is 40s and 42s for the buyers. We have our levels at 52. Look at the amount of size that's showing up here. I mean, they are really, really saying like at 53s. I mean, look up here as well. There's just so much liquidity up here. Olaf, my tick goal, depending on the day, right? Depending on the day with how thin or thick the book is, but typically 10 to 15 ticks. No, no, not really any more than that, because I find that the market doesn't really drop 20 plus ticks without reverting. So notice the amount of we're just straight lining at the minute, right? And there's not a huge amount of buying, to be honest with you. So what we can find is when the market gets to this level, when it's doing this, right, when it's just going straight line, um, when the bid is pulled, we're going to crash pretty quickly. So the market definitely seeks to go to liquid areas because that's all firms, large firms care about. They need to go to areas where there is large amounts of volume executed because they need to get their orders off. And the thing is, now that the ES in general, comparison to a number of years ago, with the bid and offer being much weaker, order types have broken up a lot more now. So they just don't like if you watch some depth markets from years ago when it was much thicker, these guys can plant 200 lots in a clip, um, and it not even be noticed. Whereas now you sling 200 lots on this now, and you light up like a Christmas tree. You know when you're slinging 200 on here. Um, so they have to break them down a lot more now, like this. There was never 400 here. They're continually refreshing in this price. 500 executed. This is exactly what I'm saying. Just different market conditions. If buyers crack here, then the next stop is the 40s. But we're in no man's land, so I wouldn't really suggest here. So let's see if they can crack. So they've hit that level there and then instantly absorbed. So this 40s here is definitely some size. Let's see, they're continually hitting. Notice the buying it's coming now. This is a bit of a surge. No, they're just so the way that I see this, right? So we'll clear this right now. So they're aggressively hitting into the or lifting into the offer, right? They're really trying to hit the size in right now, okay? And they're trying to pump the market into this level to get filled. Now watch, there's a high chance that when we get to this and fill this out, that we're going to then reverse back. And when the market goes down, watch these numbers, right? And then when the market gets to them, are we actually going to see these trade? Because they'll just instantly pull their bids and the market will drop 5 ticks because these offers are not there. It will hit 120s there, but when it hits 40 will trade and they'll just pull the remaining 70. That's how they're doing it. They're doing it extremely quickly. Now the offer is starting to really absorb. We saw absorption at 40 and 40 and a quarter. We saw 500 contracts absorbed here. They're still really absorbing in the offer, and they've got this liquidity up here. They're going to try and get this filled, I would imagine. And then, as we'd said, the further we get away from POC and the more absorption that we start to see in the offer, as soon as the bid gets to be pulled, we are going to be back down here. Olaf, pretty much, yep. On ES, yes. Treasuries is a sort of different beast. You can I trade treasuries as well. So if you notice here how we're trading 57, 45, there's a bit of absorption here, but the market's just dropped, these 2 ticks by nothing actually trading. So they're stacking up in this price. Let's see if they can crack it. So that one order type there managed to hold and then notice the offer pulled. This is what I'm saying. It's just how the market's moving. They're literally making a market. That's all they're doing. They cap a range. they get absorption, they realize they've got some they've got some path of resistance here. Okay, so they get out and then they start joining and hitting into the bid gets pulled, and then next thing you know you're down here. They then do the same, they then flip onto the bid. They absorb 500 contracts, they realize, okay, there's someone here stopping it, so we'll quickly get out, and then they start lifting into the offer and the offer's pulled. It's just the definition of making a market. This is not, none of this is really real. Do you know what I mean? Because they have the money to do this. This is just how the market ebbs and flows, especially in ES, because ES at the moment is it's really whippy. Yeah, 100%, Neil. 100%. They are 4 to 8 ticks or whatever. That's all they're doing, because they're trading hundreds of contracts. They just go to the path of next resistance. Whereabouts do they get? Where's the next trader that's of a size that's going to basically get in their way? Because if when you think about it, right, say you had, we'll just pick a number. Say you had 1,000 contracts, right? So you price went down to 39 3/4, right? We'll use that number. You absorb 500 of them, right? So you get 500 absorbed from here, and the market's stopping. Now, you can see that the offer has then been weak, so you start buying into the offer at the next price, 20, 20, 20. The market ticks up 3 ticks, right? And you've only spent 60 contracts to get it up here. You've now got 500 though from here, and it's only cost you 60 to get it up here. And then you start spending a little bit more, and then it gets up here, and then you need to seek liquidity so that you can get out of your longs. You need to now start absorbing slightly on the offer, a little here, a little here, a little here, and then when you start getting someone willing to absorb the 513, you're like, bingo, I can get out. Now we start flipping. Let me throw in a little spoof. Let me throw in a little spoof to see if anyone's there to take it. Okay, they not take it. Right, let's hit the bid. You know, that's generally how the market's moving when we're just in these balance. Because right now you've got a bell distribution curve, but the market needs to move. The market needs to ebb and flow. These guys literally are making a market. So it's not, there's nothing really happening. Notice some size comes in there, and then they're still holding this price. If they crack this, the bids below this will probably pull. Yeah, I want to see them. I want to see them test up here to see what happens. So we note that level. Let's see if they can crack here. Because 63 is shown there, but the 120 is traded. So just aggressively lifted in there. Wow. So we'll clear this. There's nothing taken there. They just pulled 30. See, there's still a wedge of buying here. Still a fair amount of buying. But when this goes down, this is going to be down. So right now, we can see all the buying. If these bids get pulled, and they will get pulled by close of play today, when these bids get pulled, this will dump. Notice the Dow is ticking down, so is NQ. There we go. All these hundreds here that are ticking, when they actually get hit into, they will disappear. So they're actually absorbing here right now. So they're still absorbing on the bid, which is never. This is never a great sign if you're selling, for example. You do not want to see guys absorbing 447 contracts when you're selling. It's actually the last thing you want to see. You want to see them not do that and just pull their orders, because then there's a path of least resistance. All we're trying to do here is find the path of least resistance to get to your 10 to 15 ticks. You don't want to see people stepping in the way and saying, I'll take that money, I'll take it there, I'm going to stop the market. You don't want to see that, do you? And you need to see price crack 38 and a quarters now, and this guy needs to be gone. But until we now crack this area, the offer needs to stay strong for there to be continued downside. But I was saying I would love us to get up here so that we can see. Yeah, that's the thing. That's the thing. It is if it's slightly faster, I suppose. And maybe if you are aggregating a slightly different way, but it's ES when it's not as thick is hard. It basically turns into a mild NQ. Okay, so note the 30 and a quarters we still need to take out. It was a guy that stepped in and held the 4 500s. So it's still hitting. It's the first sign of some sort of at least negative selling that we've seen. No, I'm with you, Vader. I've heard a lot of people say that before. Okay, so notice this time, right? Let's see if he's gone. So this time, the market to get through 38 and a quarters, 64 is traded, for example. So has he just lowered his bids? We need to see some actual size trade because nothing is really trading at the minute. Yeah, here we go. Need to crack here. See, there's some drilling into the bid at the minute. I'm going to struggle to take this. Let's see if we're going to take all this liquidity down here, right down to 33 and 3/4. If you had some size to execute, you would punch this right now because you know you can get it down. You can drop the market down here. Yeah, here we go. And that's the thing with this here. If you had thousands of contracts to execute, you would probably start punching this because there should be some size down here. Someone is definitely absorbing. 358 absorbed. If buyers don't gain control here, this is going to come down pretty quickly. So we've just seen negative 1,000 contracts here, and this is not broke across these three prices. More now. They're really trying to send this down here. Not getting any luck. If you guys are first time watching or so, can you hit the like button for me, please? Much obliged. There is 14 of you lovely people not hit the like button, so press it, please. So, over 1,000 contracts hit into the bid in those three prices, could not crack. No, no problemo. Thank you, Neil. Okay, so basically the range is capped right now, okay, for 35 and a quarter. So let's put our little lines because the range is now capped to here and up to 40s. So this is the range that has been worked on the book right now. Okay, in between this, we'll clear, right? So we've seen absorption on the offer, bid pulled down to here. Then we saw the absorption on the bids, 1200 hits, and then the offer been pulled. We're now working the range. Okay, so the market will move in between here until it gets to the next point. This is out of value for the day. But do they want to cause max pain and drive it up here and basically take out all of the stops? Because you have I don't know, a mini sort of stop of people that are, I don't know, turning into prey mode if they're selling here and putting their stop here in general. I mean, if you sold here, you should have been out here, but anyways. No problem, Neil, buddy. No problem at all, man. I'm here to help. Good question. I think I cover it. I cover it in one of the videos. It's the how to set up volume profile for DOM and chart video. I cover it in that video, buddy. If you wanna watch it, discuss how to reset it. You need to add a hotkey and stuff in. Um, okay, so let's see how we perform at 40s, right? This is the range that they're working. It's clear. Let's see if we crack it. So we're still absorbing just there. Okay, so blew right through it by 2 ticks. And let's see if they pull the bid. Okay, can we go up and challenge 44s? We're still not fantastic for sellers here, so the buyers are lifting into the offer and then absorbing 150. The same again. For sellers, need to reclaim 40s. We have 30 minutes until the real volume comes in. So we're not really seeing too much traded here right now. There's not really that much going on. Look, 4 contracts, 40. The market's basically moving on not a huge amount of volume. Okay, there's a lot of two-way here. We want to see, so we stopped at the VWAP band as well. We want to see how the market performs at 44s. See if we can crack it. note the orders here. They want to see if we hit into this with some oomph. So we're drilling. Let's see if they pull these bids. This will just crack. But again, we're in no man's land, so predicting that there's going to be direction is pretty unlikely because we're still right in the distribution curve, right? NQ is trying. And the others are pretty much in chop land. We're seeing the Dow is at least out of value, whereas NQ and the Russell is not. Look at this, some size coming in here, but just absorbed. An iceberg here at 39 a quarter, 250. So definitely absorbing higher now. It's a little bit two-way. Jeez. Okay, let's see if we can do something. Now, are they going to be gone? I'm feeling that relatively soon, in the next 30 minutes, there is going to be a bid or offer is going to be pulled. We've been in this like 5 tick range now for call it 10 minutes. So when we do break out of here, it's going to go, and it's probably going by the time of day. It's not going to move by fresh size. It's more likely going to move by orders been pulled. Yeah, DV, I cover quite a few on there. There's delta on the chart and volume profile and splitting the sessions and all that good stuff. Looks like we may be waiting for the volume to come in. You know, the sort of 10 to 4, 5 past 4 volume. Market on close data coming in, all that good stuff. Well, let me know if you guys are getting our questions. We're still at this magical 40s here right now. So you want to buyers need to be taking the next price, reloading, rather than this, hitting 60 and selling in and then back below 40s. We need to see some oomph. But key level coming up, I'd be pretty surprised if we don't at least try this 44s. Sorry, James, I just realised I missed your question, dude. Do I always look at NQ for the initial move? Well, just by the NQ being, the wild brother of ES, it can sometimes give you an idea of the way the market's going to go first, but certainly for a painless continuation on your trade, ES needs to be going in the same direction as Sorry, NQ needs to be going in the same direction as ES. Is what needs to happen. I think there's a couple of questions I've actually missed here, so I apologise. You're better at reading ES, Dom, than UV. Oh, I'm much more proficient at treasuries. Much more proficient, just because it's so much clearer. You know, ES is so. Not saying that treasuries is not algo driven, but you know they're refreshing so much here, and there's so much pulling. You know, someone could come in right now and hit 100 contracts, and we could potentially drop 4 ticks. See if I missed any other questions. No, I think we're okay. Okay, so there's certainly. I'm just gonna change this. There's certainly going to be movement soon because the market can't continue in here. And note that we said the market is going to move here on pulled orders. So we've seen this selling come in, right? And it's been absorbed on the bid. So notice the negative selling that's happened and the market's not really did anything. So it's just mean it's been absorbed. They've just flashed this 200 lot down here. So now we're saying, are we going to go to 44s or go down to 35s? I mean, bearing in mind my ultimate outlook of this is we're going to revert back at some stage, back down into the mean, the point of control down here. So let's roughly round about here, maybe a little bit further down to POC. But round about here is the rough idea. We can go up and take here, but I find it highly unlikely that if we finish the day way up at initial balance high extension, I don't know, can't really see that happening. So let's see if we continually stopped here at 37.5. See all the bids that are just pulled? Market moved with 32 contracts, 96. These are 100 deep. Let's see if they pull this. Surely not. No markets ticked down. Russell's coming to POC. And the difference how? The selling is not that aggressive, but the difference was that the bid was pulled to get down here. Okay, so they're still absorbing 131 there on the offer. You've definitely now got some size now, so if you wanted to drive this low, you would punch this now. Considering they're also ticking down here. With this size just below this 30, 35.25, let's see if they punch it. We should be going. Wow, look at the amount of absorption there. Here we go. Let's see. Are we still going to work this range or are we going? Need to break 34s. Don't pull. No pulling, please. One, we want to see some blood to the downside. That's right. Absorb and offer more. Absorb. We don't want to see this pull because if we do, then we're back in this range. We're back in no man's land again. In here. It's the last thing we want to see. And we are. You need to continually pay attention to what's actually trading at these prices because it gives you an idea of how weak and strong the actual offer is or bid. So Russell, for example, was down here a minute ago. We're now back above POC. So look at the amount of selling again down here. Imagine having the contracts and the knowledge to be able to put orders out and take 1,000 contracts on your price. You could stop the market dead. The hardest thing, the hardest thing and problem that these firms have is actually getting out of a position. That is the hardest. That's why you see the market going to extremes, because they need to do that to get out of their positions. Look at that. The markets just went bid and we've saw 19, 89, 23, 31, 15. These were 100 prints a minute ago. So we're doing this nonsense again where here where the market's going down, they're just working the range, and then the market's up 6 ticks, and with probably less than a few hundred contracts, they just absorbed 1,000 down here, and yet the market's moved up 4 ticks on like 200. Do you know what I mean? So they're just pulling. This is probably a couple of large firms that are just working this between each other, and everything in between here is all the schmucks that are essentially, thinking there's going to be direction, we're going to go down, then they drive it up, they need to liquidate, they get some more orders, same down here, until the market actually does something, you know. I feel like when we're in a range, we should just get the meme up of the stick, the stick man with the stick. We can poke ES to do something. Yeah, Neil, the dom is everything in one, honestly. So by going bid, it's just my way of referring to the market going up. I would say that tape unfiltered is it's just good to see the how busy the market is. Fast tape, market's busy, and then filter your tape to see large orders. But to be perfectly honest with you, you just want to see when large. I mean, very very simple. I think too much data is sometimes hard. So when you see large order types in one clip is important, right? You want to see where are they getting executed, for example, down here. Um, and you want to see absorption, across a few prices, and you can just simply see that by them aggressively hitting in and the market not moving. And roughly it looks like the going rate for the ES right now is like probably 1,000 contracts absorbed across three prices, or we've seen 500-600 in one tick. That seems to be, the sort of the going rate. And then in between, like no man's land, we're seeing here that, um, it's moving 4 ticks and like 15's traded. So you notice like the 75 here, if 50 contracts come in and then they lift into it, these will all pull, and this market may actually go up to the next tick with only 15 there, for example. So 93 here, let's see if we take the next price and if that's pulled. Okay, they take the full 93, they reload. So you notice here that 24 traded, so they just pulled the orders. So they're reloading here. If they lift into the offer, is that going to go? It wasn't pulled, so they take it. But then they're reloading on the bid. They're going to take the next price. Yep, they do. And they refresh. So this is more like it. In order to see the continuation, what you'd expect is you want to see them lifting in, they reload, and they stay firm. They stop this bullshit of up 4 ticks, pull back, do some reloading, lift into the offer, pull. This is the bullshit price action that ES gives you. It should be cleaner. In times we have good days, you need the clean price action. So notice here there's absorbing. Let's see if they can crack it. 200 here, just absorbed in the offer. Now we've got POC again now up at the 39.25 and 40s. That was the range that we discussed. We have 12 minutes until the volume. Yeah, agreed, James. Yeah, I noticed. That's the thing. I don't know why your name's not showing as well. Your name was showing as Howdy yesterday or something. Hey Sebastian, sure can. Yeah, exactly, Mike. I mean, the thing is, when you're seeing absorption, right? It needs to be at like there's absorption all the time, right? This is just like a micro range within the day, right? We really have got no business trading here. For us, we need to see a sweep, sell off, and then get out. These guys can just stop the market dead, lift in. Do you know what I mean? It needs to be at a key level to do business. Just simply looking at the depth of market and seeing absorption and then taking a position is not great. It needs to be the last piece of the puzzle. You need to have already done your pre-market analysis, where you want to see price going, and it needs to be the final confluence to your trade, right? So let's see if we can punch this. Um, so Sebastian, pulling and stacking is on this column here. So in essence, what you're seeing is the market lifts into the next price, okay, and they're reloading like there. So they reloaded 31s, but 54 hit, we ticked down, okay. There's 140 hit into here, they're continually reloading. There's two-way action here right now, okay. This is because we're just at the high of the range. The sellers are trying to absorb to see if we can take it back down in and do more games in here. And this is where you see a breakout of a range. Eventually one is going to hit it and it's going to then take. We're going to see some stops up here and then we target 44s. Then probably the people that punch it above this range will need to start getting out here and then we'll probably revert back down here. Just how the market works, especially at this time of the day. This is just complete and utter market making. The market's moving, but literally nothing is happening. It's just literally in a curve. Do you know what I mean? And I should probably get that magic pen thing, but you understand my concept here, you know? Like this is the volume it's carried out today. The market is not going to finish the day up here, you know? Because everyone, when it gets up here, they're going to be like, oh wow, we spent so much time in today. What's changed in the day to drive the price all the way up here, for example? Notice now they're trying to flash here to say like, look, let's drive this up, and they're absorbing, so they've taken that full amount, okay. If sellers don't gain control here after all this absorption going on, the Dow is going up. If NQ can pop up a little bit more, we should maybe see this go up. Sebastian, let me know if I didn't explain that enough, but pretty much this shows you what's been pulled, what's been added. We can see that there's 140 added across these three prices. Okay, and you can watch this just with your eyes without seeing it, but it's just a nice picture to denote it. Okay, so we're at this range. We've went 3 ticks above it, seen some absorption. Now we're threatening to go back in the range, back to more pulling. If sellers hit it here, watch these bids be pulled in a second, and then we're back in at like 38. So let's see, watch these levels down here to see how much actually trades. Okay, so with the uptick 3, let's see if sellers are going to continue hitting. Nice to see that we if we can uptick and at least challenge 40s again, because the more we get back into the middle of this range, it's into no man's land again. Notice now we've just got the POC right here. The market is loving this level, this range now. So if we do punch, let's see these levels here. If we do actually then look to trade. So Neil, do it when the volume, like, I only ever roll over when there's more volume on the next contract. That's my sign. Whenever the volume is higher on the next contract, I switch. Not not a minute earlier. Okay, we have 6 minutes. 6 minutes until the movement comes in. We could still very easily end back a POC down here for regular trading hours. This is the POC. If you're wondering why they're off, this is the point of control for the whole day. This is the point of control for the regular trading hours. Yeah, yeah, exactly. Just use the contract with the most trading hours. I don't know if you're using Sierra Neil, it should basically prompt you, anyways. Okay, we have cracked out it. Let's see if they're gonna go. They've tried there instantly. 189 then hit. We need to see buyers. See, they're getting a little aggro here, sellers. 189 hit, 85. You need to see them. Need to see buyers. Need to take this price because this 41s has been the high of the last like 25-minute range. We're seeing everything slightly ticking up. So 4 minutes to the oomph. If we're here in 4 minutes, we are definitely going to plug this area. We're just going to bang it and then test these 44s. Oh, not at all. Not at all, Neil. To be honest with you, just screen time and experience is extremely important. Ah, here we go, pulling the bid again, honestly. See that this week, the price action at this time for like 3 hours before close of when we were streaming, it's been absolutely terrible. Even yesterday, with when we had the meeting, the FOMC, the market did nothing. We had a sweep of the low back in the range, sweep of the high back in the range. We're doing the same right now. And that's simply because we had a decent move in the open. The open gave for today. Yeah, yeah, exactly. I mean, I hope that everyone watching here realizes that this is not tradable, right? You need to understand when what is good action and what is bad. Just because you're in front of the screen doesn't mean you need to click buttons. Do you know what I mean? You in this game, you literally get paid to wait. You know, that's the thing. It's like the opposite of poker. Poker, you need to pay blinds to actually take part. In trading, you get to wait for pocket aces every hand. You know, so take your time. You don't need to, use your full risk on the day, and you don't need to go all in or whatever. You don't need to use too much of your daily loss limit or whatever you're comfortable losing. You don't need to use that in one clip. Take your time. There's always given our day, there's always given our trade, and start viewing the market in terms of samples of trades instead of one or two trades so that you stop, if you're struggling with holding your trades. By holding them, I'm not meaning holding them greater than your normal TP. I'm meaning taking profits too quickly, holding on to losing trades. You need to let your edge play out and view the market in a larger time frame of trades. Yeah, exactly. There's just not really anything going on, but we should see some oomph on the dot. Let's see the time with 3 seconds. Gosh, that was nothing. I could have sneezed and moved the market more there. Jeez, oh. So I'm just going to post this in the chat for anyone that would like to support the channel in my OrderFlow cause. So let's see what we can do. Are we going to have 50 minutes here of in this range, or are we going to do something? So 200 absorbed there, right at POC as well. Let's see if we can do something. Nope. So we still have algo time in 9 minutes. Yeah, even LOC's dead, exactly. Uh, let's see if some size comes in. I would like to see is just puke, but Well, the thing is, it's good that you guys are now recognizing terrible action. That's the thing. We basically extended the range that we set by like 5 ticks. You'd be surprised, Neil. People that do not watch the DOM or have any understanding of order flow, they just say, oh, so this is an uptrend, it's pulled back, we'll buy here, and then, we'll go to the moon. We may finish the session at 72s. You know what I mean? Exactly. And that's the thing. I mean, if you guys spend the time watching the market and realizing, first off, how thick is the bidding offer? Is the market moving in tandem? What day type are we in? Where is the most volume carried out for the day? Is there a higher probability of mean reversion or continuation break? Make notes. It takes a long time to. You just it's the thing is it's hard to teach discretion. That's the thing, right? This is it comes with experience. It's hard to be super mechanical about things. Okay, so in theory you think this should be going at least to break out this 41 and 3/4 here. Now, I think it was a couple of weeks ago we saw just before this they started planting tons in MBO. So before the algo time came, right? They started planting. I mean like 50, 50, 50, 100, 100. So let's see if they're going to do it again because they're just happy to absorb these prices right now. Exactly. Well, I'm really pleased that it's provided you value in that way, man. Okay, so ES is lagging right now. So we're noticing these are pumping, but ES is not moving. So it may catch up, but it needs to break this 40, 40 and a quarter here. Yep, it's taking it. NQ's going. Still tons of two-way right now. Watch before we've got 5 minutes left, but watch the planting, right? If they do it on the bid offer, they're looking to get filled on the algo action. Hopefully, guys just didn't hear it beeping there. That's all of them combined, Neil. So what you're meaning is, so the one thing you need to remember is when the bidding offer is really thin, right? And this is still pretty thin, um, comparison to what it was many moons ago. You need to break down their orders so they don't hit it in one clip. They'll just do it in 50s, for example. And you have tons of people. You have, if you're a big pension fund, you probably don't have the skill set to execute the trade yourself. So you phone Goldman and say, right, I need to be long, 10 million S&P, for example, and then the Goldman, for example, will quote them a price below the market, right? So they then take the risk because the market may dump in that time. So they need to start then hedging. They'll either use options or the underlying or whatever the case may be, or they may actually want to be net long themselves, as an example. So they take that position. It just all depends. So they start breaking up their orders. And these 50s here are just really, I mean, they're hitting them and spoofing them, right? They're almost there just to test the liquidity out. Right, let's see how this behaves here. Let's see if they take the full amount. They should be, if they're hungry for buying, they should be taking the full amount here. They're not. They didn't take the full amount just yet, and then sellers hit that, and then they've sold 569s. So what um they could do? How long is there? There is about a minute. There's going to be tons of volume traded here. We could trade this out. It looks like it's happening already, but then literally revert back down here. So they've literally lifted into the offer all the way up here. They'll get filled and executed on their positions to close out the day, and then they may just rip it. They may just pull the bid. So we'll see what they do, or they may decide the time here is just to continually lift it. But they need to crack 44s right now. Call the two-way it's happening. Okay, they completely take it. Still absorbing. They're aggressively taking the next prices at the moment. Okay, so let's just hit this above the highs, filled out the liquidity, and let's see if they pull the bid. 30 seconds. We want to see if they decide to bang it up here, right, and end the day in a spike, or are they just going to pull the bids when this comes in? So 30 seconds. Notice there's 200 odd here, right, in each price. Look at this, they're just pulling it. Yeah, 80 traded, 116. Look at them. Fucking hell. Honestly. It's unbelievable. They got full liquidity, do all of that, right? One cake here, and then just absolutely dump the bid. Jesus. Unbelievable. Look at the bid's been dumped. Wow. Jesus. Right back now down to the point of control they're working at. Seriously. Are they gonna just absorb here and then just drive it back up? Because of course they take it back to POC. I mean they wouldn't leave that free money on the table, would they? Let's just stop it. That was, guys, that was a thing of beauty there. Pump it up, take the stops in the mini range, absorb it, and then just dump the bid. Just rack it off. We don't want it anymore. We've got 200 printed, but yet we'll clear that price with 80. So we'll basically remove 70% of the contracts on those prices. Madness. What do you guys think of that? I call that textbook. That's what I call it. Textbook market making at its finest. That's probably what they hand them out in the handbook. So they just pulled that, 100 printed, instantly pulled, and 63 traded. 7,806 negative delta at 38. I would advise you to potentially just watch how, when the markets went up this whole time, notice the absorption on the offer, right? And note when they get to that level on the chart up here, right? You saw the amount of absorption on the offer, and then when they start hitting it, when that 9 o'clock or 9 o'clock my time came in, they just disintegrated the bid, you know. Which I was saying, watch them pull the bid, because when the market starts hitting aggressive into these, they just pull these orders, and the 228 becomes 80, so they pull 70% of contracts, you know. But that's the thing. These are they're not actually even interested in buying here. They're actually on the offer, but they need to have all these stacked here to create people to buy and other not retail. We're not talking about retail. They could not give two shits about retail. They care about getting other algorithms in our firms to be buying, as an example, or at least get in their fills. They don't care who fills them. It could be John Jones, it could be another firm, it could be a pension, it could be anyone. They don't care. But the people that are doing this, as soon as they start aggressively hitting into the bid, other algorithms and whatnot will just pull their orders, and before you know it, you're down here. Parafa, what level are you meaning? Sorry, do you mean like when the market gets up here and then a news event comes out, or what do you mean? Sorry. Yeah, exactly, Neil. Exactly. I mean, you can see, man, like these guys are executing in one clip what retail would probably do in a year, or some decent ones maybe in a month. They're doing that in one trade. It's just retail. Retail has got absolutely no bearing on the market. If you've never done that, check out the Commitment of Traders reports. It's released every Friday, but one released tomorrow. Wow, what happened there? You guys need to rewind that. Did some definite size just come into either of the big six right there? Wow, that was wild. That was unexpected. What happened there? So I reckon that was definitely some size just come into one of the individual stocks that caused that. Yeah, no, we're past. Normally, I suppose it's the. Oh, so you're saying 2100? Are you talking about the price? That was crazy there. I think that might have been one order. I'll need to check that out. Someone could check the tape. I want to see if potentially that was one huge order there in ES, and it essentially just took out like eight prices. I'll need to check that out. That's interesting. Need to see if it was size. Probably size coming into one of the into the underlying stocks, but then because that's the thing. If you go in and you literally buy 2,000 contracts at market, it will cause everything to move because the algorithm spaz out. Oh, was it? Right. So that'll be them closing their positions for the day. Well, oh, I wish it happened at the same time every day, Para. It just doesn't. You'll notice the market making firms, like we've discussed on the stream. They set a range. Okay, they work the bid, work the offer within a range. Right now, it's in no man's land. It's in literally in the middle of a bell curve. So we've got no business trading that. I suppose you could create an argument to start doing the same thing as them. I suppose you could. I think that way it just your life becomes pretty stressful, to be honest. Um, and I think life is a lot simpler, in my opinion, when if we bring up the low. So we had this marked out from yesterday, and the market comes down. We saw this huge lot basically hit into the bid. The market doesn't move, and then this is the trade. This has been the best opportunity of today. And then we just see a bid back into value. Now there was your like 2015 ticks or whatever with size, and that would be you done. I mean, I suppose you could have an argument with this trade up here, but again, there is no real way of knowing that when they crack this level. So here, you know, say they crack this level, which they did, they could have very easily just pulled the offer and hit it up here. There's nothing stopping them doing that, you know. And then instantly, as soon as it gets up here, they just aggressively do the exact same thing they did there. We've got no way of knowing that. And in my opinion, I prefer to wait until this happens at the extremes, because the more you get away from the extreme, or the more extreme you get away from the mean, which was at the time was down here, POC roughly, the higher probability it is. You know, so when you're in the middle, and sort of already in a range, the sort of higher the risk is. To be honest with you. But breakout trades, I mean, the market fails breakouts like 70% of the time. It's really high. And you need a lot of things going with you for breakouts. You need to see all the indices moving at the same time. You need to see ideally some confluence coming into the underlying stocks like Apple, Google, Amazon, Nvidia, Tesla, Meta, for example. You can use something like Tick Strike to sort of gauge that. If anyone wants to try that, there's a free link in the description. Try it for a few weeks, see what you think. Um, if you're trading indices, you can basically just at the low set your frequency to 11, and you have your size that will come in, and ultimately you want to be seeing the hit a low. You have indices dropping. You want to see the bid being pulled in your market you're trading, and you want to see some size come into the underlying stocks and equities. Just as a rough idea, that's if you're only trading breakouts, that would be how I would do it. But breakouts when the VIX is low is not that likely, to be honest. You normally need to see a thin bid and offer as well in order for a breakout to happen. That's the way I see it. Yeah, exactly. And that's the thing. It's you've got no idea just how far they're going to drill it, and that's the thing. When they hit it here, they could easily they can easily just punt it up here as well. We've had streams where they've hit it here, you know, and that's the hard thing. That's the hard part. In order for me to consider doing that, I would rather this didn't happen, so we remove this part, and the market just went straight bid in here. If this did this straight line into here, I would be selling this. You know, you want to see the market hit here, then you see some absorption, then they just do exactly the same behavior here. So, look at this 16 traded 12. That's the type of behavior you want to see when the market hits an extreme, and then they absorb enough, they get out their positions, flip onto the offer and pull the bid, and then you're back down at this sort of range. Now, it is hard to hold that, to be honest with you. You need to have your home run trades every now and then, but you can comfortably get 15 ticks out of that, no problem. Probably painless as well. And that's the idea here. We're trying to take painless trades with high probability that does not use your mental capital a lot. Because the more you guys spend here and we discuss how the market ebbs and flows and just how everything works, the more proficient you're going to get with this. To learn to sit in your hands, understand good action versus bad action, and refine everything. And data and experience is everything, right? And all we're really trying to do is gauge where the big players are looking to enter and exit. That's pretty much it. Everything else is noise. Because I can tell you, back in the 80s and 90s, man, when the floor was happening, the knowledge and skill set that everyone in this chat has is far superior than these dudes that were trading in the floor in the 80s and 90s. They simply got to see when the guy from Goldman was buying 5,000 contracts, and when he was buying 5,000 contracts, they just bought with them and rode up a couple of ticks, and that was them. Make a couple of grand for the day, and that's it, done. That low hanging fruit is now gone. If they know they've got a big trader that's about to execute, they're certainly not going to get in their way, are they? And they can literally see him as well. They can hear the noise when the market's busy, because there's literally people in front of them in a pit. And they get to actually see the specific people who they know what firms they work at. We've got no idea who's executing here. Do you know what I mean? It's a completely different setup, man. So now you need to have more data to back you up and more experience, and you need to really understand what kind of day you're in and what's the probability of X happening versus Y, and what's the most likely scenario. And that's it. You need to make educated guesses. And order flow helps you to get closer to those educated guesses and see when the larger players are getting in. It's the only way that at a retail level that you're going to be able to try and get a feel for where big traders are getting involved. Because if you're looking simply at a candlestick chart, you have got absolutely no idea. If you just look at Heikin Ashi charts or candlesticks or whatever, you don't know how the market moved. Did it move by actual orders coming in, or did it move by orders being pulled? You know, how is the delta? You know what I mean? You're missing like 90% of the information, to be honest with you, just looking at a candlestick. When people say, "Oh, it's creating an M pattern," it should just sell off or whatever. Their edge. That's the thing. Their edge was literally being on the floor and just being an extremely extroverted alpha dude. That's literally it. You need to be able to basically grab your balls, shout, and say, someone says, "I've got five, I'll buy them right now." You take it, then you write it down in your little stupid scorecard, and that would be it. And then you need to watch how other traders are doing it, and you'd watch a scoreboard and you would just shout and say, fives at tens, and then someone says I'll take them, and then that would be it. The market is no different to what you're seeing right now. The only difference is they get to see the people and see the size, and you better believe it that they'll be stand beside some of their mates who say, oh, I heard, Jim from Goldman's about to unload 5,000 contracts or something. I just got a big order through from one of the funds. You better believe that's going to happen, right? Do you know what I mean? Like that's obviously going to happen. So it's a completely different world, but that's fine. That's why the stories you hear, the dudes that leave trading from the pit, they never really made it successful. There's very few of them that actually been able to switch because it's a completely different game. And you can imagine as well how many mistakes were made in that process as well. Yeah, I think it's only the agricultural ones that have a pit at the moment, but I think that's dying a death as well. But yeah, I hope. Is anyone getting any questions? Look at this, another hour of here just doing nothing. Nothing terrible, terrible price action. I hope everyone had a great stream, and we'll see you guys tomorrow for the Friday session, for Friday close, and we can mark end to another week. No problem, Neil. Spam it all you want, buddy boy. Let me know if anyone's getting our questions, and we'll look to wrap it up. There was quite a good few discussion points, so I would imagine if you guys want to go back and look at it, and if you've got any questions, just leave a comment on the video if you're planning on watching it back to any capacity. Exactly. So, Sebastian, you can run DOM drills. Do things like flip a coin, set it for 5 minutes, and you have to only look for buy trades, and then you have to basically manage your upside and downside. So if you're in a bad trade, you need to work around it. For example, you can do things like that. Just pick a random day, download the market depth, pick a random day, and run some drills. And the objective is not to make money when doing it, right? The objective is just to train your eyes and see how the market reacts at specific prices. The only way you're going to get better at it, man, is practice. Because you guys may be thinking, how the heck do you have four DOMs up here? You know, when you start when you start doing this really frequently and you're looking at DOMs for, you know, 20, 30 hours a week, right? You can quickly glance at them and see, oh right, okay, so there's three bids, 12 offered, that's not been taken, there's been some pooling, the POC's up here as an example. You can get proficient at reading them, it's just practice. Not saying that I scan all these other markets all the time, but I've an idea and general feel as to where exactly they're at, and in the main market you're trading, you need to be absolutely zoned in as to what's going on. But good question, Sebastian. There's a lot of if you Google tick drills, I'll probably release some content about it at some point. It's going to be part of the OrderFlow series, and I'll need to get round to it. What do I do outside of trading? That's a good question. Um, so I would say at the weekends, I probably like everyone else. I go meet some friends. I play a lot of pool, like sports. That's pretty much it. Nothing too exciting, to be honest with you. Eating good food. Relatively simplistic dudes, man. It's one thing as well. Life, you know, when you get proficient at something and you can make money from it, you never know when that edge or thing is going to change. So you need to be grateful for what you can do, and appreciate it, and don't piss your money up against the wall or blow it on stupid things. It's really hard to develop a skill set, and make a return, whether that be in a day job or in trading or anything in life, and it's really easy to spend money. So no problem, Sebastian, and you're welcome, DV. Hopefully, you guys enjoyed the stream. But yeah, if you're not part of the Discord, if you want to come and hang out, I'm going to probably grab a bite to eat, chillax, and we'll see if anyone's got any other questions. If anyone is going to watch this replay to do anything, leave any comments, and we can. I'll get back to you. If anyone wants to support the channel, there's a link that's in pinned, which is much appreciated. But until then, you guys have a great evening or afternoon, wherever you guys are, and we'll see you tomorrow at the same time. Hopefully, we can have a bit of a more exciting session to end the week. But it is Friday, so we'll probably have another day of balance, to be honest with you. But until then, you guys have a good evening, and everyone stay green for tomorrow's session. Okay? Peace, everyone.